Geodrill is a leading drilling services company for the mining industry, operating in West Africa, Egypt, and South America. The company just reported its Q3 financial results, and CEO Dave Harper is here to discuss them. I'm Martin Gago with Market Radius Research. Please remember this is neither a recommendation nor investment advice. We're here to learn about the company. Dave, great seeing you again.
Good. Thanks for having me back. How are you?
I'm good, thanks. I'm good. You had a Q3, more years are often not that exciting in a sense. You show strong growth. Interesting, you've got further expansion into South America. It's a bit of your rainy, wet Q3 season. So there are a fair amount of things were going on this quarter. Why don't you give us an update?
Thank you. Yes, lots going on. So we just announced our quarter three earlier this week, last week actually. Typical wet season quarter for us. So no surprises there. We did manage to grow the top line somewhat. But the big story really is the massive expansion that we've got going on in South America at the moment, which is, our newest, one of our newest markets. We've doubled our rig fleet there in the last 12 months. And we essentially got busy getting busy, if that makes any sense. We during this quarter that's just passed that we just reported on, we had a lot of rigs sort of mobilizing and getting out into the field and onto new jobs. Things are, we look at fiscal 2025, it's basically, it's basically becoming a story of two halves. First half of the year was very solid. And that's actually pretty normal for us. As things normally go, as we tend to sow in quarter three. And then we start to harvest in quarter four. And we begin the harvest in quarter four, and then things slow down a little bit for Christmas and take off again in the early part of January. And then we have a solid quarter one, and we almost always have a solid quarter two. Now, if you look at how our first half of the year played out, the playbook is pretty much the same as the year before. We always do our best work in quarter one and two. And so when quarter three has come, we use that opportunity with the wet season going on in West Africa to bring the rigs in for maintenance and get them ready for the next round of drilling. And what's different this year is at the same time as we've been doing that, we've also been undertaking, as I say, a fairly significant expansion into Chile.
You increased your rig count in South America to 19 rigs, up, I believe, up 9 rigs, almost doubling it. Were those all new rigs, or were some of those rigs transferred from your other operations? So, yeah, is that a net add, or is that just a bit of a transfer?
It has been a combination of both of those things. It's been a combination of three things. Some new rigs have hit the go line. We had some rigs transferred from the West African operations, and we picked up some late model used equipment as well. So that's not normally part of our business model, but it's certainly an indication that we're that busy that that's what we've had to do to keep our customers serviced and satisfy these contracts that we have here.
And what I find interesting is your South American revenues dramatically increased, albeit from quite a small number last year, but I believe to around $7 million this year. So obviously you're getting much better utilization than last year. And I presume there's a fair amount of costs that are involved as you scale up your operations before things, let's say, normalize a bit better.
Yeah, no, spot on. Well said. So what happens in the South American market is there's a lot of work that goes on in terms of the health and safety. Very, very high bar in terms of health and safety. Typically in West Africa, by example, we might be from the signing of the contract to getting boots on the ground and drilling would be maybe a month. South America, it's sort of you work on a factor of 3. It's significantly higher for good reason. And, the most important thing really is that we have to provide a safe working environment for every employee in the company. And it's a new market for us. We're going through a learning curve. But the rig fleet, the expanded rig fleet is all completely spoken for, very busy, and it's going to it's going to add to our revenues going forward. And it's the new thing. This is where we're going. We're kind of basically trying to de-risk the business a little bit from West Africa and sort of introduce that South American, from 2 points of view. It gives us different country risk, but also it gives us commodity diversification. We do not drill for gold at all in South America. Not chasing any gold targets at all. We drill for copper. So this has actually caused the split now, and the commodity split to go from 80% to about 20% copper. So we're currently now at about an 80-20 split, which we're comfortable with.
Sorry, Dave, 80% drilling for gold revenues and 20% drilling for copper revenues?
That is correct, yeah.
Okay. All right.
And that's up from a year ago where we were drilling about 5% for copper. And I think at that time we had some lithium jobs on the go. So essentially we were 90% gold, and I would call it 10% other. We're now currently at about 20% copper. So it's significant, it's things are really moving in that direction. And it's very important that we do. I mean, gold's doing extremely well at the moment. It's $4,000+ an ounce. We've never seen, this is unprecedented. We've never seen gold prices like this. We are in a bull market, make no mistake about that. Yeah. The other thing that's very strong at the moment is copper. Copper's, I think, $10,000 a ton or better. And I'm not sure we've seen that price before either. And so, every EV that hits the road out there, in this big, beautiful world is going to require 3 times more copper than goes into a normal motor car. All of this AI that's going on around the world, and this digitization and so on and so forth, is all going to consume a lot of copper. And they're saying that the world just doesn't have enough copper. And to drill out the deposits that will be needed to continue to supply the world with all its copper is going to require a lot of drilling. So it's very, very important that we make sure that we anchor ourselves in this market and we start to grow in this market. I'd be a lot more comfortable as the company continues to grow, that we expand into this market with the hope that we reach more of a equilibrium in terms of the gold, copper, base metals space. Yeah.
Well, I find that the copper space, the long-term fundamentals are very bullish for copper. Gold is whatever, it's its own bit of a market sentiment and supply and demand, and lots of reasons why gold, unfortunately, should likely continue to rise. But copper, the electrification of everything, it makes a ton of sense. I'm personally very happy to see your broadening geographic and commodity exposure get diversified. That's great. You mentioned one thing, something in Chile where something is a factor of 3 when you're operating there. I missed that. I don't know if I wasn't paying attention or.
No, so what I was pointing out is that the lead time from signing the contract to drilling the first hole is a lot longer in South America. And this is just all part of the learning curve of expanding into a new market and a new country, language, different issues, as you move into a new market, you go through a steep learning curve, but we're getting there. We're doing well.
Yeah, but that threefold longer time as you mature and have more of an operating base there, that's going to be reduced and be more similar to your African operations, I'd assume.
No, I think the lead time to get rigs from the signing of the contract to drilling first hole will probably remain the same, but we won't be going through this exponential growth, where we've essentially grown in South America by 2x in 12 months. And
or 10x, isn't it?
Well,
the revenues have gone up by 10x, but the rigs, and obviously you're getting better utilization out of them as well. At this time.
Well, I mean, we had 9 rigs a year ago, and we have 18 rigs there today. So, I mean, we've grown the rig fleet by 100%. But to be fair, the rig fleet at this time last year, the 9 rigs that we had there was actually only a couple of them working. And that was because the we were working up we had a very high altitude job. Just to share some esoterics with you, is that we had a very high altitude job, and when it snows in South America, in Chile, you can't work in the high altitude. We had no work down in the lower countries, and so we put the marketing team to work, and we got very busy bidding contracts, and we secured some long-term contracts with tier one miners down in the low country. And so essentially what we've been doing during this quarter three is basically onboarding to new contracts, which we are now, as we speak, at and turning and earning. So yeah.
In Africa, you've really focused on the producers as they expand their drilling to support production. Are you working with producers or soon to be producers in South America as well? Or is there more exposure to the exploration side of drilling in that market?
So we have four customers. Four of them are producers, and one is let's say, a very advanced junior, a very well financed junior, which is essentially doing a DFS. So they're drilling out a deposit and taking it through to definitive feasibility study. And so far as they're well financed, that the risk falls away in terms of getting payment. It's the same as working for a miner. It's a mine. It's a mine in
Yeah.
a mine in the making, if you will, but a well
Yeah.
financed. But still technically what we would call an advanced junior. Yeah.
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 Fair enough. Yeah.
An intermediate, if you will.
Yeah.
Not a
Okay.
yeah.
All right. One stat I was like seeing from your news releases, your man hours, 7.8 million man
Mm,
hours with injury free without any lost in time for injury, which I've those are one of the my esoteric things I like to look at is what makes for a good
mm.
operating company is that if they can operate safely and means they're maintaining their equipment and keeping care of their people, which means they're operating more efficiently for my two bits on that. Congratulations on
Yeah,
that.
no, and thank you very much for noticing. That's very important to us that we provide a safe working environment for all of our employees.
All right. So this is a bit of a transition quarter, as it typically is. So you're setting up. So can you give, you don't give official guidance, but any indication for what Q4 and then as we're coming very close to 2026
Mm.
here, what the general outlook is on those periods?
Mm. Well, you're right. We don't give guidance, but what I will quote you is what the analyst consensus is. The analysts are saying top line this year we're going to achieve about, I think consensus is 173 million USD. That's up from 143 million USD this
And you're
time.
talking 2025. That these are
I'm talking,
2025.
yeah, I'm talking 2025 fiscal year.
Yeah.
And if we accomplish that, which I have to say we're comfortable with at this stage, that would have been more or less 22% year over year improver. Analysts' consensus is just north of 40 million in EBITDA. Given the quarter that we've just had, I'm kind of saying we'll end up in around that zip code, but we might come in just shy of that, but it won't, it's just too hard to say because at this point we're still halfway through quarter four, and December is always very unpredictable if drills stop early or whatever. It's just too hard to say at this point in time. But I'd say we'll be coming in somewhere around there, and analysts are saying that we will do 13 million USD in net earnings. And I'll say at this point in time, that's probably also a bit of a struggle as well. Probably you want to we'll have to trim that back by maybe a couple of $1 million. Yeah.
All
But
right.
all in all, still a pretty good year. To
Yeah.
put out 22% or better in terms of top line. What tends to happen is when you're going through these periods of significant growth is there is a lot of that pre-financing of getting crews. When a drilling crew is being trained prior to mobilization, they're still being paid. But the thing in this business is the opportunity cost factor, and that is that the revenue is always the laggard. So where we have periods where we might have strong top line, but margin compression, that's usually because there's something coming down the pipe. So uh, relative to today's world, with commodity prices rising and rig utilizations at all-time levels for us and everyone in the industry, um, you could look at that and say, well, if top line goes up, margin goes down or comes under pressure, that's probably because there's some cost pressures, and I can assure you there has been. But what happens is that usually we get that sort of slingshot effect in the ensuing quarters, if that makes any sense. We've seen this many times over where we come through periods of growth, and the growth is followed by the first thing you see is top line goes up. Usually comes with some margin compression, and then that margin expands as water finds its own level.
Yeah. Yeah.
That way.
All right. We haven't talked about Egypt at all. I always find that region interesting, as it's not typically viewed as a big gold mining district. It was a bit of slowness there, but in your news release, you talk about things are sort of picking up there again. And just a quick overview on Egypt operations.
So Egypt was a little slow through quarter 3, but it's essentially quite busy now. And West Africa was also slow. The other thing that kicked into this particular quarter, again speaking to margin compression, was the bit of an outlier there, a bit of a once in a while event, was currency pressure. So we had currency pressures with one of the West African currencies, the Ghana cedi, appreciated significantly through quarter 2 and quarter 3, and as a result, that affected our costs. In local dollar terms, and our revenue is in USD. So that seems to be normalizing, but these things are, again, this out of our hands. But if we were to break down and compartmentalize the actual margin compression for the quarter, it was the bigger culprit was actually West Africa. So the smaller culprits were, to a smaller part, Egypt and South America. So those new markets we're really comfortable with, and with West Africa, it's just business as normal wet season stuff. So the fiscal is looking solid. We're clearly on the beginning of something pretty special. Talking to peer drillers, note with interest that utilization across the industry is improving. I'm also noticing that analysts are revisiting price targets, or multiples that determine price targets, and that's a good sign. It's all the indicators of the bull market, which, as I said, make no mistake, we are. The driller is the canary in the coal mine, and when the drillers are busy, we're in a bull market.
Yeah. All right. I think we've covered all the major points of the quarter. Is there anything we missed? And if not, any final comments before we wrap it up here?
Nope, I think we're good.
All right. Dave, thanks. Always fun to get your updates. I appreciate that.
Thanks, man. Cheers. All the best. Thank you.
Cheers.